Hello, this is Mike Swanson of WallStreetWindow.com. If you would, like this video below and leave some comments when we're done talking. I'm speaking today with Jordan Roy-Byrne, who runs the website, thedailygold.com. How you doing today, Jordan?
Hey, I'm great. Thanks for having me on, Mike.
Yeah, it's been several weeks, if not months, since we last talked, and you invest in gold, I invest in gold, and we also both trade it. According to what direction we think it's going to go. And we have seen a huge rally in mining stocks last year. In fact, the GDX gold stock ETF went up something like 50%, even though it had a big pullback starting in July. But this year we've been going sideways, up and down. Historically, the intraday volatility for gold stocks is real low. We seem to be in some trading range of gold having resistance and at $1,300 an ounce, and I guess support now around $1,200. So I'm wondering where you think it's all going now.
Well, initially, earlier this summer, at the end of June and early July, I was getting pretty bearish. I really thought the market was going to dump lower and give us one of those, great buying opportunities where the market gets extremely oversold. And right when the market started to break down, both the metals and the stocks, they suddenly had a reversal, and that reversal was sustained, and we're continuing to trade higher after that reversal. So a couple of weeks after we made that low, I mean, it took me a little while, but a couple of weeks after we made that low, I turned to bullish. And specifically looking at gold, I mean, gold came down to the low 1200s where there's important support there. And I think gold, if we were still going to be in bearish mode, we would have seen gold probably roll over around 1230, 1240, that area. So the fact that gold has been able to rally all the way back to 1260 and then above 1260, and I don't know what the high it hit today was, but something in the 1290s, and even a week or so ago, gold I think hit 1294. So the fact that gold has been able to come all the way back to resistance, and now it's been digesting recent gains, and it just, in 1300 is obviously very significant resistance. And it looks to me like gold is going to break above 1300. That's my bet now. And I think the miners, which have been lagging for many months, actually, if you look at the action this week, we're starting to see the miners kind of creep higher while gold has been going sideways to slightly lower. I'm just talking about the last couple of days, the last week or so. So we're starting to see a little leadership from the miners, and perhaps that's hinting that we're going to see gold break above 1300. And if we do get that breakout, Mike, I think we could see the miners kind of leap higher by a large margin just in a 2 or 3 day period.
Yeah, and that's really what they need to do to get going. I agree with you, and I can't predict the day it's going to happen though myself. But let me give you the bear argument for a second and see what you think. And that is that, okay, this month we saw gold go up to $1,300 an ounce, and we saw the guy in North Korea, Kim, really talk tough about maybe bombing Guam or being very mean about things internationally. And then Trump responded by making clear he wouldn't hesitate to attack, maybe even use atomic weapons. And we haven't had a president make such blunt threats in decades, probably since the Cuban Missile Crisis. So that's a scary thing on the international scene. And then since then, we've seen arguments between Trump and the Senate, and it seems like lots of chaos. So despite this tense international situation and unclear situation in the White House, gold hasn't gone up. So if that can't make gold go up, the threat of atomic blast, then why should anyone own it?
Well, geopolitics doesn't really drive gold. I mean, you'll hear people talk about that. Well, if there's a geopolitical event, that's going to drive gold. I mean, that doesn't really drive gold. I mean, yeah, it can for a day or two, but what gold basically follows the inverse trend of real interest rates. And so if real interest rates are falling, gold is going to rise. And so geopolitical events do not impact gold unless the event has some impact on interest rates or inflation. I mean, the geopolitical events of the 70s were very significant because those impacted the oil market, and therefore they impacted inflation. So this kind of, I mean, this war of the words or dick measuring contest, basically, sorry to be crude, but that's what it is with these guys putting out these statements, it doesn't really amount to much for gold. And I think it's a good sign that gold has held up around 1,300, given that tensions have died down. I mean, I was thinking a couple weeks ago, well, we'll see tensions die down. Gold can sell off by 20 or 30 bucks. It hasn't even sold off by that much, even though tensions have died down. So yeah, I'm not really worried about gold not breaking out yet due to the geopolitical comments or geopolitical related comments or concerns. I don't see that having that much of an impact. And again, I think the fact that gold has been able to hold up well after that has faded, after that concern has faded, tells us that something else could be potentially driving gold here and now.
Well, and that's why in the end that using charts or technical analysis it makes a lot more sense than just trying to trade, news stories. And in that regard, you sent me two very interesting charts, and maybe it'd be good to start to talk about them now. The first one goes back to 1970, and it shows 80% declines that took place a couple times since then.
Yeah, I mean that is actually the S&P TSX Global Gold Index, and one index that I use quite a bit is the Barron's Gold Mining Index. But I mean, there's different indices for gold stocks, and I think I'm trying to get my hands on the long-term data for this one, because this actually goes back all the way to the 1920s or 1930s. And what you can see in this index, which I find interesting, is gold stocks. I mean, from 1982 to the mid-90s, they had a really good run. Obviously, there were some bear markets in between. And from the low in late 2000 to up to 2011, they had another really good run. And, of course, we've had pretty much the worst bear market in the history of gold stocks from 2011 to 2015. Or you could say to that January 2016 bottom, which was on January 19th. And at that low, I mean, the valuations in gold and gold stocks, any way you look at them, well, gold stocks especially, they were at multi-decade lows. And so that is a historic bottom, a real secular bottom in my opinion. And this first chart, I mean, what that tells us is that just following the gains from the early 80s to the early 90s and then the early 2000s to 2011, I mean, if you plot that forward from the 2016 low, then that would that tells us that gold stocks are going to perform really well from 2016 into the middle of the next decade. Now, there'll probably be a bear market or two in between that space, but even though gold stocks, I mean, they had, as you noted at the top, a very strong run in the first half of 2016, and then they had a pretty big retracement, but they've been stabilizing and trending higher this year, albeit they're not close to the highs. And if we do see a break above 1,300, Mike, I think gold can get to 1,375, and I think that can drive some good gains in the gold stocks in September and October. So I think that's what we're setting up for. And I mean, looking at these historical charts, I mean, I was studying these last night, and I mean, that just tells us that gold stocks are probably going to perform very well, over the next, we're a year and a half into this bull market, and they're probably going to perform very well for another 7, 8, 9 years. Now, that doesn't mean that you can just buy right now and hold everything for the next 8 or 9 years, because this is an extremely volatile sector. You really can't hold these individual stocks for more than a couple years at a time, because things are so volatile and corrections can really wipe you out. But I mean, the larger point is gold stocks are still in a very good situation as far as long-term appreciation potential. And I think that's the case with the short term as well, because if we see a break above 1,300, gold should be able to get to 1,375. And I think the miners, which have been lagging, I think on that breakout, they could catch up to gold. And just looking at gold for a moment, I mean, you go back the last 4 or 5 years, there's significant resistance in the mid to upper 1300s. And now I think on this breakout, maybe gold will break all the way above 1375 and 1400. I'm a little skeptical that it's going to do that on this move. But I mean, even if we can just only get up to 1375, from that point, gold is going to be in a better position, a stronger position to be able to make that big breakout move at some point in the next year or so, and where it could reach 1550 or even higher. So I'm very constructive on gold stocks right now, both from a short-term perspective and also a very long-term perspective. I mean, I think this is a point in time when you should be adding positions. I mean, I really like the risk reward here over the next couple months.
Now, the second chart that you sent me, you talk about the long-term perspective. This goes all the way back to 1928, and it's interesting because I've seen many charts that show the S&P 500 and the Dow going way back to like 1900. In fact, a lot of stockbrokers and investment advisors like to have those on their walls because it makes it look like it just goes up to the moon without ever pulling back when you look back that far. But this chart, you got gold on it and the 10-year Treasury bond return and the S&P Cap Gold Index. So we're able to look at all of these things in perspective instead of just looking at the Dow. And what are the lessons you take from this?
Well, the lessons I take from this are that the return on all of these things is obviously going to move up over time, but it's really, I mean, people talk about what the best investment is, and they argue, well, gold has, people who don't like gold, they'll track gold from its peak in 1980, and gold bugs will obviously, they'll say, hey, well, look, since 2000, over the last 17 years, gold's been killing the S&P 500. But what that tells you, that doesn't tell you that one investment is better than another as far as long term. That tells you that for a particular moment in time, what is the best investment? I mean, it always changes. It's never, sure, there's trends, but the trends are not permanent. I mean, they last for a while, but they're not permanent. And then what asset class performs the best? That's always changing. I mean, you can look at this chart. I mean, go back to the 1940s, 1950s. I mean, look at the return that you had in the S&P 500 in equities. That was the best time to own equities. Then equities kind of went sideways more or less or slightly higher in the 60s and 70s. And that was the time when gold and gold stocks performed fabulously. Then you go back and you look at the 1980s. Well, gold obviously endured a big correction. Gold stocks didn't perform as well. That's when the S&P 500 shot up. And I mean, where are we at right now? Well, I mean, this chart is 5 or 6 years old, but over that period, over the last 5 or 6 years, well, not even that. Well, yes, since 2011, the S&P 500 and U.S. equities have performed fabulously, and obviously, gold and gold stocks have not. But gold and gold stocks over the last 18 months have started to perform a little bit better, and we know that the valuations in U.S. equities are just insane by any metric, and we know that the long-term return potential for U.S. equities from this point forward over the next 3, 5, 10 years is not going to be very good. Yet, if you look at gold and gold stocks and how cheap they are historically, I mean, even if you buy them here and now, we're 18 months past a major bottom, I still think over the years ahead they're going to perform very well and outperform the S&P 500. So, I mean, to make it simple, what this chart tells you is that over a particular time period, one asset class is going to be the leader, and that's what you really have to do when you're a long-term investor. You have to look at, okay, what's going to perform best over the next 3 or 5 or 7 years? Which asset class do I want to own here and now? And I can tell you it's not U.S. equities at these valuations. I mean, and for me, it's gold and junior gold stocks. And I mean, in addition to that, I think certain emerging markets are also going to perform well. So these are just some of the things I think we have to keep in mind when we're studying the very long-term charts.
Well, I agree with you 100%, and that's why I've got core investment positions in gold and even the mining stocks. And as we speak at this moment, I don't have core investment positions in the U.S. stock market. Sad to say, it's just as you said, the valuations are so high, but now things are seeming to become more unstable slowly. But we'll see what happens. Labor Day is going to be interesting. September is going to be interesting, and gold's bumping up on that 1,300. So this could be an interesting fall we're heading into. So as we wrap up, if you got anything else you want to say, go ahead and do it. And if not, let people know, where they can go to get more information from you.
Well, the one thing I'll add is I'm bullish on gold as long as it holds above 1260. I mean, one thing, Mike, is it's always important to define your risk and define your downside. So 1300 is the key resistance, and I think gold is going to break below that. But if gold breaks below 1260, then the breakout is not going to happen in September, as I'm thinking. And I'll also add that I own and I'm following a story which I think could be the biggest, potentially the biggest gold discovery of the last 125 years. If you've been following the sector closely, you're probably aware of what the company is, but I'll just put in a tease here that if you subscribe to my service, you can find out what that company is. The stock has done really well, but it's pulling back, and over the next couple of days, you would be able to buy that at a reasonable price. But this is look, all junior mining stocks have significant downside potential, but this is something that has massive upside potential. I mean, real geologists, real analysts who follow the geology, they're saying, we don't know how this is going to turn out, but this discovery could become, it could become something massive if they're on to a major discovery. And these are the things that you want to own when you're speculating in junior mining stocks, things with massive upside potential. So this is something I've been covering a lot in my newsletter lately, and I'm really optimistic on it. And you can follow my work at thedailygold.com, and it's great to be on with you again, Mike. Thanks for the opportunity.
Yeah, thank you, and we'll talk again soon. Have a good day.